It's time to do business again. Welcome to Business Incorporated. I'm Ini John Mekwa. And as usual, we start from the global scene to see what's happening today. We're discussing oil, and we can tell you that oil prices retreated, having climbed almost 2% in the previous session as investors assess the latest development on U.S. tariffs and a higher than expected increase to OPEC Plus output for August. Brent features we see for this afternoon is in the red, lost 0.2%, bringing that to $69.46 a barrel. WTI is also in the red, is more than that, 0.4% is what we have, a drop of WTI to $67.68 a barrel. U.S. President Donald Trump began telling trade partners on Monday that sharp higher U.S. tariffs will start August 1st, though he later said that the deadline was not 100% firm. Trump's tariffs have raised uncertainty across the market and concerns that they could have a negative effect on the global economy and oil demand, while prices seem to be pressured by that OPEC Plus unwinding its voluntary output cut, tightness in the middle distillates, and Houthi attacks on cargo ships are supporting the market, according to traders. OPEC Plus, remember, met over the weekend and agreed to increase supply by more than 411,000, which is what was agreed before now. Now it's going to be 548,000 barrels per day from August, exceeding the initial agreement. And still staying in the oil and gas area now, let's see what's happening with the price of diesel in Nigeria. That's the conversation we'll be having with Ajibola Ayodeji, of analyst with Financial Derivatives Company. And we've seen diesel as a major source of energy in Nigeria. We've been having a lot of attention on PMS, but it's not just PMS. With the movement of global oil prices, we also see movement in the price of diesel. So we see for diesel price movement, price paid by consumers went up 25.24% year on year from 1,403.96 naira per litre in May 2024 to 1,758 naira 26 per litre in May 2025. So we see the difference there. On a month-on-month basis, there's been an increase of over 2% recorded between April 2025 to May 2025. So while we see the drop in prices, global oil prices reflect at the pump, at PMS, it seems to be on the other way for diesel, which is mostly used by industries in the country. Let's find out what Ajibola Ayodeji has found about this. Hi, Ajibola. Good afternoon and welcome to the program.
Good afternoon. Thanks for having me.
Good to have you, Ajibola. So we know that both petrol and diesel come from global oil, and the prices have been reducing from the global space. It doesn't seem to reflect so much or be captured so much in diesel in Nigeria. How can we explain this?
All right, thank you. I would like to say this, that petrol or PMS in Nigeria is being consumed by majorly the household and small-scale businesses, which they use in running their day-to-day activities. And although petrol has been deregulated in Nigeria, it is still subjected to some level of internal control and some market stabilization efforts due to its political and social sensitivity. That's why we are seeing the price differential. When we talk about PMS, that's one. And two, there's this survey that we used to carry out in our company, which we call vehicular count. And we discovered that in November, December in 2024, when the price of petrol was around 1,065 naira, the number of vehicles on the road declined to like 2,300 within that period. We did for like 2 hours. We do go for the survey for like 2 hours, and we saw that the number of vehicles decreased to like 2,300. But in May 2025, when we saw that, when the price of PMS dropped to like 890, we saw an increase in the number of vehicles on the road to like 2,500. So we can conclude that the degree of responsiveness to price when the price movement is more for PMS, that PMS is more price elastic than diesel. But when it comes to diesel, diesel is majorly being consumed by industry, by factories, by telecom companies and everything. They use it for their logistics, they use it for running base station, and they use it for factory, for processing and everything. So irrespective of the changes in the price of diesel, they will still demand for it because of the erratic nature of power supply in Nigeria. They still demand for it. So we can say that the demand for diesel in Nigeria is more price inelastic. So irrespective of the price of it, people, they still go for it to run their logistics, for operational activities, and for manufacturing purposes.
Thank you so much for that. But the National Bureau of Statistics announced Nigeria's May headline inflation rate, revealing a rate of 22.97%. Approximately 23. That's down from what we had, 23.71. One of the major stoking factors, according to that number, is logistics, driven by diesel, with an upward price of diesel and downward price of petrol. What impact is likely to have in the next inflation number?
Okay, yes, the price of diesel has a major impact on the price of goods, which affects inflation numbers, because the increase in the price of diesel will affect the cost of production for factories, and it will affect the logistics, which will bring about increase, and the increase is passed to consumer in form of high prices. However, because of the base effect and the decline that we are seeing in the PMS price, we might not really see the impact of the increase in the price of diesel on the prices of goods. And even if we are going to see an increase, it will be marginal compared to what we might expect. We might be expecting a marginal increase in the price of
all right,
goods and
Jubala, just hold
services.
your thought for a bit because for our DSTV viewers, there's the Joint Committee report on the payment of 13.6 billion naira gratuities backlog by Governor Dauda Lawal in Zamfara State. It's going to be paid to past Zamfara government old gratuities. It was owed between 2011 and 2023, and that payment is being done. But that's for our DSTV viewers. But for our other platforms, please continue here and stay here with us on Business Incorporated. And I'm going back to you, Jibola. Well, diesel has always been deregulated, even before petrol. Deregulation is supposed to promote competition, which could help drive prices down in the long run. However, as you noted earlier, the price of petrol doesn't seem to be moving, the way of the global oil. It's rising. It's risen about 33% in even countries like Angola and all of that. So the impact of this and the impact of OPEC Plus meetings and decisions, seems a bit confusing.
Okay, so I'll say this, that for Angola, the increase, I'll say, is because of the removal of their subsidy, which made their PMS to increase by 33%. However, because the global prices have been increasing, however, in Nigeria, we will not see much impact of the global increase in the price of diesel on Nigeria diesel prices. Why? Because we have because of the presence of Dangote, we have Dangote produces diesels in large quantity, and we have modular refineries in Nigeria. So even if there is going to be impact of the global prices on diesel prices in Nigeria, it will be minimal compared to other countries.
All right, Ajibola, thank you so much for this analysis.
Thanks for having me.
And now let's leave the oil space for a bit and see what's happening with metals. Gold prices eased on Tuesday, weighed by higher U.S. Treasury yields as U.S. President Donald Trump announced new tariff proposals on trading partners, including Japan and South Korea. So we see spot gold is down 0.3%, 3,320. $4.19 per ounce. U.S. gold is also down the same percentage, and that brings it to $3,333.60. Spot silver is unchanged at this time at $36.72. Platinum is, it seems today is a day of 0.3% in the red. That's what we have for platinum, also at $1,366.25. Palladium is the lone gainer at this time. It's up 0.5% at $1,116.86. about an ounce. Well, gold is stuck between a rock and a hard place. That's what is being explained now. Negative for the gold is the U.S. decision to extend the deadline for a trade deal for many trade partners. And it's from July 9 to August 1st. Positive for the gold price is the fact that the U.S. trading partners in Asia might have to deal with higher tariffs in the near future. On Monday, President Trump told 14 countries that sharply higher tariffs would start August 1, marking a new phase in the trade war he launched in April with levies between 25% and 40%. And now let's come to Nigeria, where the central bank has directed banks to submit a capital restoration plan as part of regulatory efforts to support the exit from the forbearance regime. In a circular signed by the CBN Director of Banking Supervision, Olubukola Kiyomi, published on the bank's website, it says that the capital restoration plan would complement its other measures, which include termination of forbearance exposure and single obligor limits waivers, suspension of payment of dividends, bonuses, and investment in foreign subsidiaries for affected banks. The CBN said that above measures and ensure forward-looking capital planning, all affected banks are required to prepare and submit a comprehensive capital restoration plan to the CBN on or before 10 working days following the end of the quarter, with effect from June 30, 2025. Well, the hottest news now is BRICS. And yes, we had a conversation on that this morning in two segments of the program. One was with Dr. Biodun Adedipe, where we explore what could happen or what Nigeria's stand should be at this time. And he shared his perspective during Business Morning.
We consider our position as Nigeria. Are we still going to be talking about the grammar of what we knew in the 1970s as the non-alignment movement then, or be talking today about our own national interest, which is to say, like, Ayo said earlier on, Nigeria must first and foremost consider her own interest before we talk about balancing relationships. So which means it is the best we get in terms of offer that Nigeria should pick up for the table. It's an interdependent world. And so we must also realize this. We need the world needs us. And that applies to every country around the world. Even the largest economy in the world, the US economy, is the reality of the life today. So in my own thinking, there is a good opportunity for Nigeria to also take interest and be involved in what is happening with BRICS. American companies that are doing business in the rest of the world, he now also mandated them that they will prefer to produce their products within the US territory. So he is pursuing American interest, and that shouldn't make us also abandon our interest. And that is why, in my own view, Nigeria is not in any, so to say, risk that cannot be managed.
Confident Dr. Adedipe there, and I guess confident President Bola Tinubu also attended the BRICS summit in Brazil, invited by the president. And of course, in participating there, we saw President Bola Tinubu mixing up and joining and supporting the notion that Africa would present a coordinated front through AFCFTA, but he had other things to discuss at the meeting.
The African continent is creating the path through the African Carbon Market Initiative and Great Green World. We believe that eventually COP30 will strengthen our resolve to strategically embrace a healthy global environment. Therefore, we believe Nigeria remains guided by our long-term vision 2050 and nationally determined contribution, we are taking bold steps to accelerate renewable energy adoption, mainstream climate action, promote nature-based solutions, strengthen urban resilience, champion South-South cooperation, align with global renewal framework, achieving unilateral healthcare coverage for all.
Participation. And following that participation of Nigeria through its President Bola Tinubu, Nigeria is to face additional 10% tariff. According to President Donald Trump, he announced that Nigeria is among the countries facing that additional tariff for aligning with what he has described as the anti-American policies of BRICS. The U.S. President made a declaration via a post on Truth Social, adding fresh uncertainty to global trade relations. Mr. Trump's announcement did not elaborate on any specific policy of BRICS, came as the group's meeting is underway in Brazil. And still coming from the BRICS meeting, the president of South Africa has been very active and outlines the plans of members of BRICS as well as partners of BRICS as the world discusses how to win itself off the dollar and overdependence on the United States.
We commend the important work undertaken to review the strategy for BRICS Economic Partnership 2030. In view of the current geopolitical challenges and trade uncertainties, the strengthening of trade and investment ties between BRICS countries is therefore absolutely essential. The fourth industrial revolution has brought about a new era in the social and economic life of all countries and all people. It has demanded that countries develop new policies and strategies to enable an inclusive, whole-of-society approach. Global institutions and inclusive participation are needed now more than ever. And it is in this regard that the reports that we've just received from the Business Council, from the Women's Business Council, as well as the Civil Society Council, are very important.
So that's it. BRICS is going to be in the conversations globally for some time, especially with this new introduction by President Trump of tariff, 10% tariff. Well, let's take a break now. When we come back after the break, Yvonne will give us intraday numbers away from BRICS, I hope. Please stay with us. Welcome back. Still Business Incorporated here on Channels Television. Let's head to the markets now. We have Will Ibon. Will, tell me we have hit 122,000.
I told you to rally all the stockbrokers in Nigeria to facilitate that, because I don't see how the market could have. Well, there's nothing that can happen in the market. We did see that movement, 120, 121, and we hit 120.
Yeah.
But let's just say that hopefully, maybe investors will listen.
Maybe close of
trade today. There'll be that, movement, or probably, bulk sales, shifting hands, and
I'm going to enter the market. Once I enter the market,
they're probably waiting for you to make that, and I'm sure we'll hit 122 by the close of business, and we'll celebrate that, for stock market.
All right, I'll be waiting.
But you did mention that maybe away from BRICS, but stocks are still reacting, especially maybe not Nigerian stocks, but stocks in Africa and other parts are reacting to this tariff, and you definitely see that reaction.
Especially the BRICS punishments,
penalty.
Just
being aligned with BRICS makes you take a break. You take a break for that. Now, so major stock markets in Africa were positive at intraday. We see Nigeria's NGX trading higher, well, slightly higher, edged up 0.05%, not reacting to any BRICS news right now. Dangote Sugar, Cadbury, and Fidelity Bank were one of the stocks that boosted that counter, that index rather. We see in South Africa, looking at the GSC, we see it up at intraday 0.35%, also not doing badly, especially with the news tariffs. Elsewhere, Egypt's EGX is closed today. News coming in, the stock exchange suspended trading on Tuesday following major disruptions linked to a fire at the telecom center in Cairo. The fire, which broke out Monday at the Telecom Egypt facility, killed 4 people and injured at least 22. As communications across the city were also disrupted, affecting brokerage operations. Authorities say an electrical short circuit is suspected as the cause. The fire has since been contained. Meanwhile, the Nairobi Securities Exchange closed Monday's session in green territory. It was up 0.72%. Let's look at what's happening at the NGX. Let's go back now and see what's sustaining our positive trend. We did hear that circular from the CBN extending for the forbearance. Well, more news coming from there. And Vincent Oshoma, securities dealer, Midpoint Capital Limited, is joining us to discuss this. Good afternoon, Vincent.
Good afternoon.
Vincent, CBN has temporarily lifted its cap on the AT1, that's capital, until March 2026, which allows banks to count more of their high-risk instruments, towards their capital buffers. But how much of this capital boost, how much of a capital boost does this really provide to banks that are struggling, especially during this transition?
Yeah, it's quite good that CBN is coming out with this clarification. Remember the initial announcement that it really impacted our market. And we saw a significant downward trend for like 2 days in the market due to the news. But this clarification, which made people believe, because it was like a doomsday announcement. But with further clarification like this, we have seen that people are now instilling confidence in the banking stocks. And I think it's good for the banking sector. It's good. We are seeing major banks reacting positively with the clarification. For the other banks, I think with the capitalization that is also in view, they are still concerned about the smaller banks. What's going to happen to them? Are they going to meet the recapitalization? I think we'll continue to see the kind of announcement will affect discussion about the recapitalization move, and also the talks about measure. So it's good for the industry.
Okay, but with the removal of the loan waivers and the imposition of, now we're seeing quarterly capital restoration plans, which the CBN is saying that the banks should provide, how quickly can undercapitalized banks, meet the new thresholds? And are there any strategies they should be focusing on to bridge any, remaining gaps?
Yeah, you notice that the major focus have to do with their capital adequacy ratio. And also for banks that are already have planned, because now we're already fast approaching the deadline for capitalization. I think a lot of those banks already have their own plans in terms of meeting the capital. And also the plan that CBN is giving them time. What CBN is trying to do is just to make sure that banks don't go on some excessive moves that will affect their capital, especially as we approach the recapitalization. I think it's a good thing for the banking sector, and also for banks. Like I mentioned, some banks already have their plans, and for those ones that we already know that they are having issues, it will guide their discussion as they approach this deadline for the recapitalization. Also, the close monitoring by the CBN, trying to tell them to submit their plans, I think is good for the industry.
Okay, so how are banks, investors reacting to this news, this news circular? What are we seeing for banking stocks, the performance, especially at intraday, possibly what we'll see at the close of trade?
It has been a muted reaction in terms of the stock, because most of the stocks are actually relatively trading flat compared to their opening price. A few of them, 1 or 2, that's just slightly below their prices. So it has not really impacted, because people don't really see this thing. Because you remember when the last CBN came with the last public announcement, and the data came with more clarification, a lot of those banks, we saw how they reacted in terms of bringing clarification. We understand that 2 banks are clearly out of this forbearance issue when you talk about GTCO and Stanbic, while the other banks also talk about their well positioned to be able to meet this deadline and still be able to reward consumers in terms of their dividend. I think for the market now, it's just a muted reaction in the market, not a major reaction from the banks.
Okay, let's look at consumer goods. We did see that rally with Cadbury yesterday, and some Dangote sugar is in the news. Well, at intraday, one of the movers at intraday was driving. What are the news investors are, feasting on right now? That's boosting that counter right now. Any earnings in the offing?
Yeah, we are approaching the end. We are actually in the ending season when banks, companies expect to start releasing their results this month, latest by the end of the month. And with most of these companies that you see that are experiencing some rally, they have had challenges recently due to the devaluation and that have affected a lot of FX losses, devaluation in their books. With much stability in the FX market and also with some level of relative stability in the economy, people are expecting that most of these companies, their results will show a significant improvements in their Q2 results. So I think investors are actually positioning ahead of time, so that once this result, they are actually expecting positive performance from these companies. And also for Dangote Sugar, they talked about the measure. And when you now look at the current position of NASCOM, we have seen significant appreciation in the price of NASCOM. I think people are also expecting outside the FX stability, expecting some movement in Dangote Sugar. I think that would be some of the drivers of this movement in price.
And Vincent, I was going to say you're being telepathic there, because I was going to just ask you right now, what next for the merger? Since we've seen FX stability, we see return to profitability for consumer goods sectors, what's going to happen with Dangote Sugar and NASCOM? So from what you're saying, are we going to still have this merger?
Yeah, the last time that the measure application was rejected by SEC was that the chairman of the company mentioned that they are going to come back to the market to see how they can work on that measure, because some of the reservation from SEC does not mainly have to do with NASCOM and Dangote, it has to do with Dangote Rice. I think with some level of activity there, they are just trying to beat time. I think we should expect them to come back to the market. But in terms of when that will happen, but it's expected that the measure will be kickstarted very soon for them to conclude it.
Okay, so do you see the market closing in the green? We're just slightly in the flat line, not so far from 0.00% here. So do you see the market closing in the green or flipping to the red zone?
I see improvement. Investor sentiment is quite high. We have seen outside those stocks you've mentioned, we are still seeing some improvement, because as the last time it has improved about 0.15%. So relatively, we are seeing investors positioning for ahead of the release of these financials. And because of what is generally happening in the economy, and also with the downward trend in rates, we expect to see more interest in the capital markets, because we look at the Treasury bill rate and also the recently announced savings bonds rate. We have seen a reduction in rates, and people are looking at these factors, and we have seen the capital market gaining a lot of attention. I think that's some of the things that we're seeing moving the market upwards.
Thank you so much, Vincent Oshoma, securities dealer, Midpoint Capital Limited. Thank you for sharing your perspective on Business Incorporated.
Thanks for having me.
So let's look at other stocks in the Middle East now. We see stock exchanges were subdued in the Gulf on Tuesday, with investors exercising caution over U.S. trade policies after President Donald Trump announced steep import levies on several trading partners and pushed the tariff deadline to August the 1st. Dubai was trading down 0.63%. Abu Dhabi also in the red zone, 0.07%. Still within the region, we see Saudi, that's the Tadawul Index exchange, also down 0.29%. We see Qatari Index, however, in the green, 0.3% up. Let's look at the U.S. now and see how stock futures performed in pre-market trading. They were mostly flat in early trade as investors absorbed the market fallout from President Donald Trump's latest trade moves. Dow futures slipped about 0.06%. 0.06%, while S&P 500 futures were slightly up. And this is especially after Goldman Sachs lifted its forecast. Nasdaq futures gained 0.2%. And it follows a market sell-off on Monday after Trump expanded his tariff list to 14 countries and extended its reciprocal tariff deadline to August the 1st. Let's see how Asia performed at the close of business after this news. Following this news, we see the market swung between gains and losses, mixed trading there as investors weighed President Donald Trump's new tariff threats on 14 U.S. trading partners. Goods from Japan, South Korea, Malaysia, Kazakhstan, and Tunisia will now face 25% duties from August the 1st. Other countries hit include Indonesia at 32%, Bangladesh at 35%, Cambodia and Thailand at 36%, while Laos and Myanmar will be subject to about 40% tariffs. Now, despite the uncertainty, South Korea's Kospi jumped 1.81%. Nikkei closed up 0.26%, and China's Shanghai rose about 0.7%. But Hong Kong's Hang Seng Index, we see it increasing by 0.09%. India's markets also closed up at 0.24%. So Asia are reacting really pretty well to this news. I'm sure that other markets, mixed reactions going up and down. Let's see how Europe will respond to this. I'm sure you will have conversation with Lars on that.
Especially because in Europe there's a trade negotiation going on. They also got a letter.
Yes.
And South Africa got a letter for 30%. They also got their own letter.
But Europe is expecting a deal, like to strike a deal this week with Donald Trump before the deadline, the August the 1st deadline.
And I remember Ms. von der Leyen had said that, well, their minds are quite open when it comes to dealing with President Trump. I mean, they're ready for a good deal or no deal. They're just expecting whichever will come. But I mean, let's find out from Lars.
Let's see. Lars will definitely give us the details.
All right, Lars. So, I mean, we see it's another round of tariff talk. The letters have been distributed. It's not August 1st yet, but I mean, obviously talks are on. But first of all, let's start from the market, Lars. I wonder how the market is doing at this time with all of these trade talks and negotiations.
Yeah, hi, Ini. It looks really like markets are just hanging in there. We're being kept in this holding pattern with really not much going on. We're seeing virtually the DAX in Frankfurt and the FTSE 100 in London unchanged. I think last time I looked, they were up 0.1%. The CAC 40 in Paris a little down. But again, for another day, Ini, no big moves like we've seen for the past 2 weeks now. Much of it has to do, obviously, with the fact that in summer there's often not much big news breaking. Volume is down as well. And then, like you said, there's obviously this ever ongoing uncertainty around Trump's tariffs. Of course, we know about the letters to Japan and South Korea, and that doesn't even have a direct consequence for Europe, of course, but still it feels markets and investors here, they're just tired of all the trade talk and the lack of clarity.
Yeah, and then you have another 3 weeks to do the trade negotiations and talks. I wonder what to expect.
Yeah, the more we're hearing from Washington and from Brussels, the more I get the feeling that it's not even about that 3-week timeline or any other unrealistic timelines here. That's not the problem anymore. Look, Ini, it has always been clear that the EU and the US wouldn't be able to negotiate a comprehensible trade agreement within such a short time. As a matter of fact, I'd say no trading partner of the U.S. can negotiate a reasonable agreement in just a few weeks. And those who have signed a deal, looking at Britain here, for example, they've basically used the old deal that they had. They made some updates. It was mostly a big show put on to placate Donald Trump. Now, let's not waste any more time on Trump rushing to get deals. The much bigger problem is the European Union appears torn over what kind of a deal they actually want to have with the United States. And Germany and Italy are the 2 EU member states that are in fact making the case for quickly signing a deal. No wonder, because their economies heavily rely on exports to the United States and they fear higher tariffs. But then on the other hand, you have France and Denmark, for example, who are warning that the EU might be about to sell out to the US and likely would regret that later.
Interesting word, sellout there, Lars. So, I mean, why are they worried about sellouts? I mean, it's a block and everybody should be able to benefit from an agreement or a deal.
Oh, absolutely, Ini, but they're clearly worried about signing a deal that would just be bad for the European Union as a whole. You know, the EU, for all its faults, for all its bureaucracy, the EU has a lot that's been working pretty well. Strict regulation for products, services, safety, data security, and there are many who fear that those rules and regulations could be weakened specifically for the United States, and that the entire system built up over decades could begin to crumble. A few examples here. The US would like for the EU to loosen food safety standards, to allow the import, for example, of agricultural products from the US that do not currently qualify under the regulations we have here. The US also wants the EU to loosen the rules of its Digital Services Act to benefit American business giants like Meta, Facebook, Apple, Amazon, and such. And then, you know, when it comes, for example, to the auto industry, Trump would like EU automakers, and of course, that's to a very large part German automakers. He wants them to move more and more production across the pond. Now, mind you, German automakers already run huge plants there in the US, but Trump wants to have a larger market share for US-made goods, which would obviously weaken those companies' home markets. And some are saying, and rightly so, should we really just agree to all this just to avoid some higher tariffs on simple products like maybe cars and steel?
So many things to weigh and balance there before a decision, at least a beneficial decision, can be taken. But thank you so much, Lars, for bringing that to our enlightenment.
Yeah, thank you, Ini.
All right, just before we head to African news, let's take a break. When we come back, we'll do Africa and then we'll do what crypto, some of the stories making the headlines over there that's still here on Business Incorporated. Please stay with us. You're still watching Business Incorporated here on Channels Television. Some of the things happening in Africa now is China has approved imports of soybean meal from Ethiopia as part of efforts to expand protein sources amid the trade war between Beijing and Washington. And the country will be allowed to import Ethiopian soybean meal that meets China's standards and is free of pests. That started July the 3rd. The approval comes after Chinese feed makers secured their first shipment of soybean meal from Argentina since approving imports in 2019 in an effort to ease potential disruptions from the US-China trade war. In June, China also approved imports of soybean meal from Uruguay, joining a growing list that includes Argentina, Brazil, Russia, and Belarus. China primarily imports soybeans from Brazil and the US for processing into soybean meal domestically, with limited direct imports of soybean meal. Ethiopia Airlines, the national carrier of Ethiopia, has extended its frequency into the Murtala Mohammed International Airport, Lagos, to 2 frequencies, totaling 14 weekly. The milestone flight was received by Dr. Ibrahim Kana, the Permanent Secretary, Ministry of Aviation and Aerospace Development, who led the federal government's delegation at the airport. With this, Ethiopian Airlines has reinforced its Nigerian footprint with a total of 31 weekly flights, which included 7 out of Abuja, 5 from Kano, and another 5 from Enugu State. Kana lauds Ethiopian Airlines for its operational consistency and strategic growth. The International Monetary Fund has approved the disbursement of about $367 million to Ghana. This is after the Executive Board completed the 4th review under its extended credit facility arrangement with that country. The Finance Minister, Cassie Atto Forson, said that the disbursement validates Ghana's unwavering commitment to fiscal discipline and strategic economic transformation. Ghana started restructuring its public debt in December 2022 to qualify for the $3 billion support from the International Monetary Fund. Mozambique has intensified its fight against illegal fishing through a specialized training program for maritime law enforcement. It's launched in partnership with the Indian Ocean Commission, IOC, and the European Union. The initiative, led by Mozambique's National Maritime Institute, brings together naval officers, coastal police, inspectors, and magistrates to enhance investigative and prosecutional capacity in fisheries-related offenses. The initiative, led by Mozambique's National Maritime Institute, brings together some of these officers and says it aims to improve evidence collection and case handling in a sector plagued by unregulated activity. Illegal, unreported, and unregulated fishing costs Mozambique an estimated $60 to $70 million annually, undermining marine ecosystems and national revenue. Common offenses include fishing without licenses in the exclusive economic zone, use of unauthorized gear, harvesting protected species, and transshipment of catch of the high seas. Inama Executive Director says that the source of UUI calls for coordinated and sustained enforcement, noting that the national territory has been used as a transit route for products derived from illegal fishing, such as shark fins and abalone. IOC representative Tiana Randambola notes that the need for stronger national systems and regional cooperation, while EU delegate Alex Garcia reaffirms support for sustainable fisheries governance. The training forms part of a broader regional strategy led by the Indian Ocean Tuna Commission following a 2022 course in Mauritius. Mozambique's crackdown aligns with its role as host of the Southern African Development Community Regional Fisheries Monitoring Center and reflects growing regional momentum to curb IUU fishing and protect the blue economy. And U.S. President Donald Trump's decision to impose a 30% tariff on South African exports has drawn sharp criticism from political analysts, with one calling President Cyril Ramaphosa's recent visit to Washington plain nonsense. That's what it describes it. It reports that South Africa will face a 30% tariff on all exports to the U.S. starting August 1, following a formal letter from Trump to Ramaphosa. The letter dates July 7 and sent on official White House stationery accuses South Africa of maintaining long-standing trade barriers and contributing to what Trump has described as unsustainable trade deficits against the United States. The blanket tariffs will apply to any and all South African products sent to the U.S. and are being implemented outside of any current trade agreements. And partly following that, the South African rand edged up in early trade on Tuesday, buoyed by hopes that the country would still salvage a less damaging trade deal with the United States after President Donald Trump extended a tariff deadline to August 1. Trump informed Pretoria and more than a dozen other trading partners of sharply higher trade levies in a wave of letters sent out on Monday. South Africa is facing a 30% trade tariff on its exports to the U.S., but the extended deadline has opened a window for further negotiations. The U.S. is South Africa's second largest bilateral trading partner after China. In addition to minerals, car parts, and other manufactured goods, South Africa exports agricultural produce to the U.S. and stands to lose about 35,000 jobs in the citrus industry if tariffs take effect. South Africa's presidential office said that the 30% tariff rate is not an accurate representation of available trade data, adding that the country would continue to engage with the United States. South Africa's benchmark 2035 government bond was weaker in early trade as yield rose 3 basis points to 9.86%. All right, now let's head to the crypto space and see what's happening there, see how much of the tariffs have sipped into that. And we see for the headlines that the U.S. Securities and Exchange Commission officially begins its review of Trump media's proposed dual Bitcoin and Ethereum ETF, which aims to provide 75% exposure to Bitcoin and 25% exposure to Ethereum. Well, the ETF's launch would coincide with the growing momentum in the crypto ETF space and speculation about a more streamlined SEC approval process. While Trump media's application progressed, the SEC has delayed Fidelity's Solana ETF by reopening public commentary. The ETF's valuation will rely on the CME of reference rates, with Bitcoin tracked via the CME of Bitcoin reference rate and Ethereum via the CME. And we've seen Ethereum actually surging in the last few days compared to Bitcoin. We'll have a conversation on that with Gilbert in a couple of minutes. But before that, also there's another headline. Abu Dhabi has issued its initial blockchain bond and is partnering with the first Abu Dhabi Bank and HSBC. HSBC seems to be moving in the blockchain area. This marks a key milestone in the region's digital financial direction led by Abu Dhabi Securities and Exchange. So imagine a bond, in blockchain bond. Interesting. The world is getting more interesting. No paper, no middlemen, runs on a secure tape-proof ledger. So interesting, and we see the UAE really pushing the frontiers in that. And then also another headline that we have: Meta Planet accelerates Bitcoin ambitions with aggressive growth strategy. That is also another headline. The Tokyo-based company Meta Planet aspires to exponentially increase its Bitcoin holdings. This is not the first. Meta Planet not the first. So they intend to go from 15,555 BTC to 210 by next 2 years, 2027. This ambitious strategy involves utilizing their Bitcoin reserves as collateral in acquisitions, including the ventures into digital banking. Let's talk to Gilbert Jokpata on some of this and a whole lot more. Gilbert, good afternoon and welcome to the program.
Yeah, it's my pleasure, Ms. Ine. Great to be here.
Good to have you. So we see, some institutional investors stating their strategy to increase holdings of Bitcoin. I wonder why at this time. Is the global uncertainty part of the driving factor, you think?
Okay, I think what we're having is beyond, global uncertainty. What we're seeing as well is the market maturing. Governments of the world have either fully regulated the cryptocurrency market or have a framework, for the cryptocurrency market, to have a legal playing ground. We've also had countries also making their countries tax-free. We've seen countries as well making friendly crypto policy and causing a very major migration of crypto capitalists to their country. We even have major headquarters, despite Donald Trump wanting crypto to be the headquarters, wanting US to be the headquarters of crypto and those bold statements. But we still have Dubai and Singapore leading, including Malta. So we're seeing the market come into full maturity. Then at this time, we are not just having, we are also having traditional companies, having cryptocurrency holding. And recently we haven't seen a classical example of of companies that have crypto in their holdings, their stock having massive surge. You could see it with MicroStrategy, Coinbase hitting multiple all-time high, Marathon also doing over 1,000%. I think recently is Bitmine announcing adding Ethereum to their holdings, and the coin went ahead. Their stock went ahead to do over 3,000% in just a matter of days. So we are also having family office, and major institutional traders now have it, including ETF. So there's a legal playing ground where heavy institutions can play into the market. That is why we're seeing this level of adoption and also buy-in. It's beyond even global uncertainty at this time.
And we see Ethereum giving Bitcoin a run for its money. Is it possible Ethereum can it overtake Bitcoin? Do you see that?
Well, one thing I always see is this, debate between Bitcoin and Ethereum, which is a store of value. The thing is that Bitcoin is seen and has showed us over a period of time that it is digital gold. However, Ethereum is more like the digital fuel that is powering smart contract, DeFi, stable coins, and also NFT. So holding Ethereum give you an entire exposure to the blockchain economy, not just one. So I think that Ethereum is going to do its thing. And recently, if you see the number of activity happening in the Ethereum ecosystem, from developers activity, staking activity, and seeing institution positioning as well, I think that Ethereum is ready to be one of the assets that is going to lead the next phase of the cryptocurrency market. But then I think it's kind of not great always comparing, this competition between Bitcoin and Ethereum, which is the store of value. They are both doing great things in the market, but they are meant like they actually serve two different futures. Bitcoin being the digital store of value, while Ethereum is more like the fuel that powers the digital economy on blockchain.
Yeah, well, I think it would be difficult for people to stop comparing, especially when you see, the movement, and you just don't have a choice but to compare. But what for you is the next price driver at this time? We know the tariff talks are on, letters have been distributed, August 1 has been given. Do we see that moving prices in the crypto space?
Okay, if you look at the market, I think that there are lots of signals that is giving us anticipation of what is to come. Let's look at technically, Bitcoin has flashed the golden cross. The golden cross is the most historically accurate signals, in the cryptocurrency market. We've recently also had the inverse head and shoulder printed. Presently, Bitcoin has also formed a bullish flag. These are all bigger time frame bullish signals in the market. But then we need a triggering event, at this time. And structurally, if you look, first of all, I think there's this data that came out recently of about 1 trillion in profits the market is sitting on recently. But I think that even though we may test the support of the bullish flag, the market is very, very positioned for some upward movement in any time from now. But then we need that major triggering event, which I think that is going to be, if we could, with a large level of certainty, anticipate what the next rate cuts will be. A good thing, the U.S. initial jobless claim will be out today. They are forecast of about 235K jobs. However, we need this so that we can gouge in and price in the Fed's decision in regards to interest rate, which anticipatedly we're looking at September. I think that once we have a fair interest rate decision, this will be a very major triggering event. However, I think that once we have this retest, regardless, the market will form an all-time high. But then we need a major triggering event, which I think that the interest rate decision will be that triggering event.
All right, except it's another hold, Gilbert. But thank you so much for your time and views on the program.
Yeah, thanks for having me.
That's it on the program. Thank you so much for being a part of Business Incorporated. We're back again tomorrow, God's grace, beginning from 10 a.m. when we'll do Business Morning, and then 1 p.m. we'll do Business Incorporated. I'm John Mekwan. Enjoy the rest of your day. Bye-bye.